and I'd like to wish all the distinguished panelists, ladies and gentlemen, happy and good morning. And also today, it is also the Mid-Autumn Festival. So I'd like to bid everyone a very happy Mid-Autumn Festival. So while we are in a celebration mood in the midst of pandemic, we are also going to delve into that very interesting topic that is about digital bank and fintech, the game changer. And together with us, of course, we have this very superb and distinguished panelists. I'm afraid that if I have to introduce their credential in detail, it's going to take the next 1 hour. So therefore, I would urge all the listeners, participants to go back to your this agenda and speakers folder to look out for their credential, just in case you have not come to know them yet. Just briefly, our first speaker or panelist will be Mr. Peng, who is our icon in our digital industry, who actually started Silverlake, and then Silverlake has become amongst the world's foremost provider of digital banking solution with 380 clients around about 100 countries. So that's the first one. And second speaker, Mr. Matthew Chen, who is the CEO of Sunline. That is also the foremost digital and financial system provider in China and coming to the international market. So lots of new inroads as well, as there are a lot of innovative digital services coming to the market. So Matthew Chen is the Group CEO of Sunline Overseas Business Group. Next, we have George Lee, the Managing Partner of Tin Hill Ventures, who has spent the last 20 years in banking technology, international trade, and fintech organization. So lots of wealth and experience to share with us as well. And another person is forever young. Elain Lockman, whom I actually met and know since the MDAC days, and she somehow never grow in her kind of age or look of the age, even though some years has passed. I'm not going to reveal that. And of course, Elain, very illustrious background, being an iconic so-called successful woman, what they call that, the leader in the Malaysia, and she had her stint in various organizations ranging from Petronas to MDAC, Malaysia Debt Venture, DG, Packet One, and so forth. And now she is the co-founder and director of Ata Plus. Next, we have Dato Henry Goh. All right, it's a very interesting. When I get to learn about him, he was a young entrepreneur. So right now he is considered younger entrepreneur, because compared to the more senior and older one, he's still considered younger, and very successful MACROKIOSK that's listed. And MACROKIOSK has been operating right now in 37 countries, spread over 24 different industries, in enabling them to go digital. All right, so certainly a lot of experience there to share with us. And we have, last but not the least, Mr. Peng, who is currently the Chief Strategy Officer for Green Packet Berhad, overseeing the broad spectrum of functions relating to strategy, change management, investor relations, communications, people, and Green Packet Academy. So there's very broad area, and of course, the core business unit to drive the growth strategy to becoming a leading player in Malaysia's towards Malaysia's journey of digital transformation. So with this distinguished panelists, I'm going to invite everyone to have 5 minutes to share your insights about this topic, digital banking and fintech, the game changer. Just 5 minutes, please. I'm aware that maybe two of you may have some slides, and please skip to the 5 minutes because we would like to leave the remainder of another half an hour for a very active engagement through the dialogue session. All right. So to start with, may I invite Mr. Goh Peng Ooi to kick off this sharing of 5 minutes. Mr. Goh, please.
Hi, can you hear me?
Yes.
Okay. Well, I have been talking about banking since I was taking charge of banking in IBM 33 years ago, and the fact that I am still relevant, it shows that banking is something about evolution. In fact, banking has evolved 500 years, and I would like to share some charts to show the complexity of banking, and then leads to the segregation of the so-called traditional banking and the new digital banking. Now, let me show the complexity of things by sharing some charts. Can you all see the charts?
Yes.
Okay. Now, if you look at banking, it is about evolution, and it is about trust. It is about rules and regulation, and now I have to make sure my charts. Can you all see my chart?
Yes.
And of course about shared value, shared purposes, and so on. Now this is basically traditional since 500 years ago when Luca Pacioli noticed that there is something universal about banking, and these are the universal values. And evolution basically based on invisible hand, technology, trust, regulations, rules and regulation, purposes, shared values, and coverage. Now, what have changed are the behaviors. The 500 years of banking, the behaviors changed. And of course, based on the behavioral change, rules and regulation may change. And that whole lots of things is what we are talking about. And what will happen, obviously, is very much as simple as vertical and horizontal applications. But how to do this is just a very complex problem that if you look at the next chart, I'm trying to move to the next chart, but I don't know why okay, now I'm moving to the next chart. Now this is actually the complexity of, in fact, you see books behind the books, and it's the complexity of what actually this vertical and horizontal structures is all about. And if you look at the 33 years of evolution of Silverlake, this is what the organization looks like today. And so basically, if you look at Silverlake, we have the so-called vertical application, which one of them, which is mobiles, is definitely making a big breakthrough in some of the top banks and beating all the new suppliers. In fact, most of the old suppliers are completely out of the game. And in fact, we won, beating all the new suppliers. Now, on the other side is the so-called core banking or traditional games, and which is equally important because you can't really get out of the fact that banking is evolutionary, is going to be based on rules and regulations, and it has to be trust-based, and it has to be purposeful and shared values, and so on and so forth. Now, to build an organization that responds to this environment, it is definitely not something that can be described in one word. but it can be described in one chart. So if you look at the green colors, they are actually what we call family, which is basically the evolutionary part of Silverlake. Now the orange part, they are the extended family, which is basically the behavioral part of Silverlake. Now these are all equally important because finally, how extended family can be linked to existing family is about sharing values. Now, so of course, the oversight is extremely important because banking is about regulations, about rules, is about trust, and it is not just banking. It is actually about everything. Every enterprises should actually have the same structure. That you should be looking at evolution. You should be looking at trust. You should be looking at rules and regulations, and you should look at shared purposes and so on and so forth. Not just purely looking at technology. Technology is actually a very small fraction of the whole business ecosystem. Now, finally, a complex company like this definitely has a challenge of persuading investors. Luckily, we were able to start with $1. We dividend out the money ourselves. We basically developed all this with the capital $1 since 31 years ago. It took me 2 years to prepare, so it's 31 years ago. I started with $1, dividend out the money, and then continue to develop. And today, so what is the value of this organization? We really don't know. And that's why we set up a new fund side, which basically evaluate ourselves rather than leaving it to the market, because market, I don't think, can understand what we are doing. And the fact that we can evolve from $1, we can fund ourselves, definitely we are relatively independent from the fund market. And that independence, the word independence is actually a very important word in academical world, that we have to look at things independent of our opinion. And that is called symmetry. Now, independent of our emotion, independent of our opinion, independent of technology, independent of everything is actually called symmetry. And this is a collection of books just I show. So going forward, obviously, there will be behavioral technology, and there are actually, we last count, we have a group, which is this one, the production 4, actually look at all the technologies, and there were about 70 plus new technologies. Now, when you look at the new banking, we are using about 30 something plus of the technologies. But coming to the behavior is quite really quite simple. It is about young people going online. It is about banking remaining rule and regulations and trust-based, and has to be purposeful and so on and so forth. Just now, there was a conversation about, okay, you just can't give money away. The money has to be lended out purposefully. It cannot be just giving money away. Now, that wouldn't work. And that shows banking has to be purposeful. It cannot be just simply giving money away. Now, and so it is actually a very complex story, but luckily the 33 years, we have summed up our organization, and I obviously, wow, you can put it in 5 minutes, but it took me 33 years. But I will conclude by saying it's not going to be that complex. No, it's going to be a symmetry matrix. It's not just a matrix, it's actually a symmetry matrix. And basically it's evolution, which is based on invisible hand and technology, trust, rules and regulation, purposes, shared values and coverage, which means extending to other countries. Like we have consciously developed markets across 70 over countries. We have 2 bases in Western Europe. And so this is basically what we did. But finally, we're addressing banking, addressing business models. We are addressing actually behavior. It's as simple as that. You know, addressing the business, of course, the business models across the world, and of course the behavioral changes. And that, of course, you respond with new technologies. Like I said, there are about 70 over the new technologies that appeared over the last 10 years, or maybe last 15 years. Now, and that obviously will have impact how you develop solution. It's not everything about AI. It's not everything about blockchain. No, it's actually a weaving of these technologies that leads to a viable and profitable solution. I hope I convey the message that it is not as complex as what we think, but obviously the weaving of the technology, the weaving of evolution, the weaving of trust, regulations, rules, big purposes, and shared values and coverage and behaviors, the weaving of these things together obviously is not simple, but the structure is not going to be that complicated. And if you call that digital banking, it's fine. Now, it's just words. You call that whatever name, they are just words. But it's unlikely monolines, which is the vertical side of the business, the vertical side, which technically is called monoline businesses, it's not going to kill the bank. So it basically, new digital bank is not going to kill the bank. I told WeBank about 15 or 16 years ago when they started, and I said, no, it's not, you are not going to kill the bank. Bill Gates said the bank is going to be killed in 1996. In fact, those days I said, no, it's not going to be killed. And it's going to be the same today. Thank you very much.
Thank you, Mr. Goh. Well, as a moderator, I intentionally kind of set it to 5 minutes with a few minutes of buffer there, and indeed it has worked. Thank you very much, Mr. Goh. I think in that 8 minutes or so, you have 9 minutes. You have actually put together the 31 years of experience, putting this Symmetrical Matrix. Certainly a very interesting start for all of us. And we'd like to move on to our second panelist, Matthew Chen. Matthew, please.
Thank you, Dato, and thanks KSI for inviting me to this stage. I'm honored. First of all, I'd like to wish everyone a very happy Mid-Autumn Festival. It is the Mooncake Festival. As everyone might be aware, to Chinese people, the moon actually represents reunion or harmony, right? So in my opinion, rather, from Beng's point of view, rather than viewing technology as a threat or as a disruption, the banks should embrace these changes that are caused by technology, right? So collaboration is really the key. We are talking about a banking 4.0 era. So banking anywhere, anytime, but not at the bank, right? So the notion of anywhere, anytime, not at the bank, it actually refers to the digital transformation journey of the conventional banks. But digital transformation is actually not something new under the pandemic, right? It actually happened long before the pandemic hits this planet. I mean, if you look at some of the experience that happened in China, for example, 17 years ago, right? There's a similar, pandemic that hit China, right? The SARS actually hit China in 2002 and 2003. In a way, that SARS actually accelerated the digital transformation process in China, including in the banking world, right? Because the banks has to answer to the behavioral change, echoing Mr. Goh's point, the behaviors, human beings' behaviors probably is the most difficult thing to change, but no choice, right? During the SARS situation in China 17 years ago, everyone was forced to shop online, hence accelerate the e-commerce and so on and so forth. And the banks has to answer to the behavioral changes, and therefore a lot of technologies were introduced by the tech giants such as Alibaba and Tencent, right? And we are seeing the similar trend with this COVID situation globally right now, and definitely this if you talk about any silver lining out of this COVID situation is the digital transformation has somewhat been accelerated, right? So So what do I mean by, collaboration is the key? Because, a simple test, right, anyone can do is we've seen a lot of examples in China that some of the largest universal banks, they're trying to create a super app, right? So from technology point of view, that's doable. So you can building, people's digital lifestyles, like social, like travel, taxi hailing, anything you can do, right? You can technologically possible to build that into the banking app. But in real life, behavior is very difficult to change, right? Nobody's going to open up your mobile banking app to order pizza, right? To hail a taxi. So an interesting test you can do, anyone can do on their smartphone is you can rank all the active apps on your smartphone, and then you can rank them by screen time, how actively you use it. Usually your banking app is the last little dot in the end, right? So that's the least active application that you will use on your smartphone. Why? Very simple, because you only open up your mobile banking app when you're trying to touch the money, because when you touch the money, you're concerned about security, right? So you always open up the banking app only when you touch the money, and the minute you finish that transaction, transfer, whatever you have, you will shut it down, right? Unlike a social app such as WhatsApp here, right, and WeChat in China, you probably will leave it on all the time, right? Because you need to connect with other people, connect with the world. So that is the behavioral change. In that behavior, because the behavior is the most difficult thing to change, rather than in the traditional way, rather than a very centralized, monolithic approach, getting your customers to coming to the bank really need to push their product and services into people, right? So that's what I mean by collaboration. The banking 4.0, when I say bank anywhere, anytime, but not at the bank, it really means that the bank has to weave their financial services into people's daily life, albeit right now, all kinds of digital, apps out there that accommodates people's, daily life, right? That's really what I mean by collaboration. Therefore, this behavioral change asking for technology change, right? It's not the other way around. It's a behavioral change asking for technology change, because people are going on digital, and then therefore the bank need to weave their product service into people's daily life. Therefore, the traditional monolithic, way of doing banking is no longer working, right? So it's called for technology change, such as a core banking system, for example, right? So it calls for a decentralized, a Lego-like core banking system, so that you enable the bank, empower the bank to weave their financial products and services into people's daily life, right? And on top of that, data will be the key, right? Because it's not only the financial data that are relevant, there are a lot of, external, non-structural, external data that they're going to be relevant. So the bank needs to use technology such as artificial intelligence and blockchain to mine those gold mines, mine the data, so that in order to know their customers better, right? So therefore, the future way of banking is really about embracing these technologies. And I can give you an example of a platform that we launched late 2019, right before the pandemic hits China, right? And then we managed to connect about 30 banks today, because this platform really sustained the stress testing of pandemic in China, right? So starting from a couple of banks on this platform to today, we have 30 banks that we'll be able to connect it with 25 fintech companies, and then we managed to bridge them and tap them into potentially the largest super app in China, which is really the Tencent, right? So we tapped them into the 1.4 billion WeChat ecosystem, and just like to share some stats. As at Q4 last year, the numbers actually quadrupled, right? So starting from 100 million, smart saving products, about 50 million macro loans product were issued on this platform. Through at the end of last year, we have about 860 million smart saving product, digital wealth management product, as well as 460 million micro loan products issued on this platform, right? So what we are doing right now in Malaysia is we like to work with some of the financial institutions as well as government agency to build an open banking platform in Malaysia to encourage the trade, right? Especially the cross-border trade in Malaysia, in order for the economy to recover in a post-pandemic situation. So I'll pause there, Dr. Wei.
Well, thank you, Matthew. Interesting that you brought up banking 4.0, anywhere, anytime, and also the key message is also to weave banking into every other industry. All right, we shall of course discuss a bit more after this, and I'd like to move on to our third panelist, that is George Lee. George, please take the floor.
Thank you. Good morning, and I'll try to keep to your time limit that way. Good morning,
Thank you.
yes, and fellow panelists. Very pleased to be able to speak to you from Singapore here. Hopefully in person soon, as you know, my family is also in Malaysia once we get past this pandemic. I've spent, you know, the better part of almost 25 years in the banking and technology space, and I've had the privilege of looking at this from a bank holding company perspective, finance companies. Most recently in fintech, I spent the last 5 years developing fintech propositions, and even from a perspective of government policy. And to some extent, I feel quite torn, you know, what Matthew said earlier about digital transformation not being new. Yes, it feels like one of the most exciting periods in innovation across many industries, banking and fintech, no different, undergoing all sorts of transformation. But at the same time, it feels to me like many of the current developments actually may be missing critical strategic components. And I think it makes for exciting news to talk about the battle between fintechs and traditional banks, digital banks and incumbents, but the reality is actually a lot more nuanced. And banks, you know, on the one hand have this overwhelming advantage in their ability to raise cheap retail deposits, have well-oiled risk and governance and compliance organizations. And then fintechs, on the other hand, have this, in theory, greater agility, greater ability to innovate and lead the adoption of new technologies and business models. You know, very critical to it is business models. I think Shankar from Ernst & Young earlier mentioned the fact that banks surveyed, 2,000 banks surveyed in the APAC region, you know, the vast majority have not actually touched business models. But does that really give fintechs that edge, that advantage? Maybe in specific areas where there are incredibly embedded inefficiencies. For example, payments, or even new areas such as crypto assets. Today, I advise both traditional as well as digital digital bank experts in the ASEAN region on their market strategies, their technology, you know, deployment strategies. And I want to share with you 3 key takeaways from all my engagements with them. And if I could trouble you that way for the first slide, please. The next page. Yeah, so just a couple of points I want to make. The first point really may seem like motherhood and apple pie type of statement, but I think needs to be really reinforced. We keep hearing about how tech is disrupting this, tech is disrupting that. You know, as Matthew said, digital transformation has been around for forever. The reality is that banks have always been a strong adopter of technology and even a leader many of the time. And so we do ourselves a great disfavor by constantly repeating the threat of tech disruption to banks. And then who are we serving? You know, I know this may be a bit controversial, but I think, you know, perhaps all this talk about tech disruption is either very, very greatly misinformed or by parties that wish to push up the valuation of their tech investments. You know, around the fact that there are challenges to the incumbents, and of course, push down the value of the incumbent institutions. The reality is that technology is very commoditized. You need it, but it's not going to hand you success on a plate just because you're digital. Which leads me to my second point in relation to digital banks. There's definitely a lot of hype, and of course, Malaysia is anxiously and excitedly waiting for the announcement of up to 5 new banking licenses early next year from, I believe, you know, over 30 applicants. And it feels like a gold rush. It's a big contrast from 20+ years ago when we were talking about consolidation and scale. If I could trouble you, Dato, for the next slide. So make no mistake about it, a digital bank is a bank. A bank is a regulated entity. Some concessions may be made by regulators. Bank Negara is making some concessions for the new digital banks. But fundamentally, the digital bank is a bank. You can be digital, unique, but all you have is a variance in your channels. You're still going to have to abide by regulatory capital requirements, the way you originate, the AML, KYC rules, liquidity limits, and so forth. And I suppose it's exciting to be a digital bank shareholder or investor. And retail banks, of course, have the advantage of being able to raise these low-cost deposits, but are subject to a lot of regulation. So the moment you become a bank, you may be this great fintech, but the moment you become a bank, then you need to be subject to the same rules. And regular retail banking is actually fairly profitable. The blow-ups that we hear up in the market are typically in the exotic areas, investment banking, commodities financing. But banking itself as a discipline, it goes back hundreds of years. The way you originate, the way you classify assets, the way you manage your balance sheets and liquidity. And it's dangerous to assume that technology drives everything. And even a senior technologist like Mr. Goh mentioned that that's not the case. A digital bank is still a bank no matter what. Once you strip away all of that, the profitability of a bank is still going to be dependent on the way you run the business sustainably and provide finance inclusively, no matter what the condition is. Which brings me to my final point, I guess. If I could have the next slide, please. Thank you. If not digital banks, then how about fintechs? Are they changing the world, disintermediating banks, disrupting the whole industry? Frankly, I think that's again all venture capital and investments bank talk. The truth is that the future of fintech is set by the pace of digitalization, not the other way around. It would be arrogant for us to assume that's the case. Digital banks have been around for forever. In the early 2000s, there was egg banking in the UK. We know what happened to that. It came, it went. Branches came back into form, and I'm sure we'll have to realize that banks are not taking it lying down. So I'll be happy to take more questions later and speak to you about this. I'll cut myself short here. I'm sorry about that, Dato.
Well, all right. Thank you very much, George. Well, you touched on bank, and also tech has always been in a fin. So in fact, we cannot differentiate them. So at the end, it is about the bigger environment, how digitalization will actually affect the model, how bank adopt a lot more digital, features in their banking services. Right, thank you for that. And we'd like to move on to the only lady we have on this panel, Miss Elain Lockman. All right, Elain, please.
Thank you, Dato, and thank you, KSI, for inviting me here today. And also, I'm privileged and honored to be within the esteemed panelist today. So I would like to take this discussion into a slightly different angle. I think a lot has been spoken about, bank adoption and transformation of banks. And no doubt, I think George touched a point just now, whereby he mentioned, yes, banks have been actually adopting technology, progress and changes over the years. But I think, and George also mentioned just now earlier that, there was an attempt by, banks to go digital, but at the end of the day, it didn't work out, in the past. But I think the landscape right now is very different. And I think this was greatly brought about by the progress specifically in mobile technology. And this is the tipping point, really. I think without mobile technology to be where it is today, I don't think this would have been possible, even with a lot of the fintech players now. And if you look at it right now, right, the traditional banks are actually adjusting somewhat. If you look at quite a lot of the high street banks have actually reduced the number of physical, I would say, outlets, right? And they are moving on, they're reducing their capex expenditure. I think moving on to looking at how they can engage with their consumers. And with the consumers, they need to look at the demographics right now. If you look at the demography, I think millennials and the Gen Zs has overtaken the baby boomers generally globally. And this is very, very important because the way this group of, I would say millennials and baby boomers, the way they look at things are very different. These are the future generation who will probably never even look into stepping into a physical bank in the future. So, and what does it mean to them? You know, what are services to them? And that's why you see new players coming into the fore, right? The AirAsia group, Axiata, Grab, Google, and Facebook, you know, coming onto the fore too, because they have large communities, and these guys, you know, will actually stick to what they like and what they know best, and you know, and it's just makes sense for these groups to actually provide other value-added services to this community, and to them, right? It's not just about, okay, what is value to them? And this is where I want to touch on the relevance of Beng. Beng will always still be relevant. I think in the previous session, someone brought about the issue on crypto, yeah, and also whether there's certain, I think, countries now, they recognize cryptocurrency as a legal tender. But that's still questionable to me, mainly being if you look at the way the crypto economics at the moment, I don't think it will work as a legal tender because it's just too highly volatile, because it is just too speculative in nature. Yeah, you can't, it's very difficult to have that as a currency, and imagine using it in a typical shop whereby today, for example, 1 Bitcoin, you know, you can buy a bag for 1 Bitcoin, but tomorrow suddenly it goes down to 0.1 Bitcoin. You know, it is very difficult for it to be used in a traditional trading sense. Yeah. So, but looking at coming back to the younger generation, what is value of money to them? You know, what is a value of currency? What is currency to them? Because, you know, to them is anything that they can use to be traded to get a product and service, and they can accept that. In their minds, that's a representation of value, whether that is fiat currency or a crypto or a token, you want to call it, right? So as long as it can be recorded and it's accepted by both parties, and this is where I think in the earlier session, we talked about the relevance of blockchain in this environment. So, so there's a lot that we can talk about, but technology, yes, you're talking about AI, cloud computing, but I think the other thing that I think that a lot of fintech players actually see, and maybe the bank actually need to evolve, is actually the process. Business process re-engineering, there needs to be innovation in terms of how they look at processing. Yeah, I just give an example. Cabbage, for example, a loan platform in the US can process a loan within 30 seconds. So this is the kind of, I think, areas that I think banks need to, traditional banks need to look at, going about digitization and moving forward into the future. Thank you, Dato.
Oh, thank you, Elaine. Well, you have touched on to share with us at the onset, like all the AirAsia, Grab, and like, they have large base, so therefore they could actually yield enormous impact in this new space of financial services. Well, of course, you also talk about currency, the issue of cryptocurrencies, the fluctuation, and how it can be accepted as a legal tender or otherwise. And then lastly, it's about the process. All right, we will come back to that in a short while. Next, I would like to invite Dato Henry Goh to share with us your thoughts.
Hello, hi, good afternoon, everyone. Good afternoon, Dato Wei, and thanks to KSI for having me again on this panel. Yeah, it's always nice to be with people like George. You know, I've known him for a while. I think we have been in the fintech industry for a certain period of time now. Of course, Mr. Goh as well. Yeah, I think end of the day, whether is it a technology or not, I believe that the direction of any businesses, whether is it banking or otherwise, will very much depends now going from an environment of supply-driven to now a demand-driven environment. So in the sense that technology is being utilized to satisfy the demands of customers. So whether the banks need to adopt technology or not, or whether the bank is going to be a disruptor, technology is going to be a disruption to banks or not, I think that is not the main thing, but rather the point is that technology is being adopted by banks to satisfy the different demands that's available all around the world now, I would say. If you look at it, why fintech companies are better, or even why digital banks are required, simply because that the demands nowadays from the consumers are extremely, I would say, personalized, customized, and also in a way that they would like to do it the way they want it, rather than previously you always just put in a position that banks will say, this is how you get things done. This is how you apply a loan. This is how you going to spend your money, for example. But generally, in the new world, it's driven by the other way now, in the sense that the consumers will say, I want to apply a loan this way. I like it to be faster, easier. I want it to be done online. I want it done anywhere around the world. I think this is what driving technology. And banks that are not adopting these technologies are the one that's going to be disrupted. So the disruption of banking at this current form comes from the demands of consumers rather than coming from the technology by itself. Talking about technology per se, I think banks, traditional banks, if you want to put it that way, they have been moving into technology quite quickly. I mean, if you look at it, MACROKIOSK per se, we have been working with banks in Malaysia and around the region for the past 20 years. And we have been using technology to value add their banking services. And we can see in the early 2000s till now, or even from year 2000 to 2010, a lot of banks are utilizing technology in the form of trying to use it to reduce their costs. So things like, for example, online banking comes into place so that there are more things that can be done online without going to the banks, branches, for example. But then we can see that now lately, especially for the past 5-6 years, banks are now adopting technologies simply not very much in a cost-saving environment, but rather in the form of saying that I need to then now meet my customers' demands. So in the sense that digital, I would really say in the sense that traditional banks have been adopting technologies, so there's no problem about technology disrupting them. And also, I would say that traditional banks are also digitalizing themselves. So I would say that there's no much difference between really a digital bank and a traditional bank. But however, I believe things like a lot of the central banks, or even like our own Bank Negara Malaysia, is introducing or accepting digital banks simply because they would like to offer more advantages or benefits to the consumers at large. Rather to say that digital bank is because they're bringing in new technologies, I don't think so. But I would say that it's benefit the consumers as a whole, simply because it's probably they can do things faster, they can do things obviously cheaper by itself. So if you look at it, traditional banks, I believe they can also compete with digital banks. However, of course, there are also operational issues. For example, whether the regulatory would be, or the regulation would be a level playing field. That's the first thing. The second part, in the sense that banks are big employers. They employ thousands of people, and as such, their cost base is higher, much higher. And of course, and the investors to these banks are expecting them to make more and more money each year, whereas investors in digital banks, they are probably looking at, I can lose money for many more years to come. And as such, this creates a big issue to the traditional banks, rather than technology itself, I would say. How do I actually let go of staff, for example? I mean, there's a lot of hoo-ha in terms of the how do I reduce costs by letting go of staff, which then, of course, digital banks does not have. Digital banks do not have this sort of large cost base or even employees. to manage, and obviously the investors' expectation of both banks are different. So I would say that technology is always a complementary to banks, and banks they have been accepting technologies and adopting technologies, whether they are traditional banks or digital banks itself. But however, as I say, the big risk to traditional banks comes in the form of regulation and operational costs and investor expectations rather than technology by itself. And obviously, the direction of banks, whether it's digital or traditional or not, would very much be consumer demand driven rather than bank supply driven methodology. So in such an environment, to meet consumers' technology requirements nowadays is only through technology is possible. And as such, I think technology will continue to play a very important role in the banking environment. Yeah, thanks. And I think that's all for me.
Thank you, Dr. Henry Goh. So you touch on the supply and demand, and it's like moving forward, it's going to be driven a lot more from the demand rather than the supply. And of course, the bank structure, the cost structure, with the with the technology adoption, will have to be an area to kind of pay attention to, because it is how it will affect how they actually continue to run the business and compete. All right, so we shall now move on to the last but not the least, Mr. Koo Kok Peng.
Good afternoon, Dato Wei. Thank you. And a quick shout out to my former colleague, Zan Mokzani, as well, for introducing us earlier on. I just have a couple of slides, which I hope will be used as a baseline that will allow us to have a better discourse later on in respect of our view of the digital bank space and in the context of the digital bank application process at the moment. So if we could have the slides pull on. Right. We call this slide deck Responsible Disruption, Digital Pathways to Championing Financial Inclusion. I allude to what George and what Dr. Henry was saying just now about disruption. But to be clear, when we say disruption, is not to take on the banking institutions or the industry. Really is about presenting services and products that is required by an underserved segment. And that's what we mean by disruption. And we will hope to do that in a responsible way by creating trust relationships. If you can move on to the next slide. Just a quick, okay, so this is just a disclaimer, we can skip on. Yeah. So as a quick background, I think digital bank is, we are actually a little bit late to the game, and a lot of countries in this region have actually embarked on it. But if you look at the Bank Negara guidelines, basically they're looking at getting the digital banks to serve the unserved and the underserved. And when you look at these two segments, basically you have the individuals that form the 8% of unbanked. And if you look at them, they basically have either low or no income. They are from the adolescent to the young adult group, and a lot of them are actually from the north and east of Malaysia. If you look at the businesses, the SMEs are the ones that are in need of help, particularly the micro SMEs. You can see that 63% of them have some difficulty in accessing banking services, and the medium SMEs, about 45% of them have some of those difficulties. Moving on. So digital bank actually, to our mind, acts as a connective neurons, connecting neurons between consumers and the underlying products and services, ensuring that the needs resonate with the available offer. So what we have to be very clear is that digital banks are not meant to digitize the banking process. That's two different things. And I think in some of with the traditional banks, what they are doing is some form of digitizing, but also they are taking a deeper understanding of digital, what they call the true sense of the digital banking as well. What we mean by digital banking really is about building the consumer journey and experience and giving them what they need when they need them. So really is about what does the consumer need and how do we use technology to give it to them in an adaptive way, because what they need today may be different from what they need tomorrow. And the technology will allow us to adapt to that evolution of the needs very quickly. And this is where the new products and services, the services beyond CASA, scenario-based banking using AI, machine learning, and IoT. This is how we bring it to bear to address the underserved and the unserved market, and at the same time giving these consumer an enhanced experience that perhaps the traditional bank is unable to provide them, not because they don't want to, but because of the legacy and the size that they have to manage. If we can move on to the next slide. So we, in submitting our application together, of course, with Zico Holdings and M24 Tawarik, we have done our research. And this is just a quick snapshot of an MSME survey that we did to try to understand the MSME space. And it is very easy to jump to the conclusion that what the MSME needs is payments. But actually, the whole digital bank proposition goes way, way beyond payments. We found out that they need business and financial advice, they need bookkeeping and reporting, they need cash flow management, and these are some of the top needs. So this very quickly found, the misconception that people may have that digital bank is about digitizing the payment channels. It is not. It goes far beyond that. Moving on to the next slide. Thank you. So our approach is that the digital bank must facilitate the consumer's short-term financial goals, right? And we do that by scenario-based banking services, using new approach, using technology to meet the unmet banking needs. And there are a lot of these segments that have needs that the traditional bank is not perhaps well positioned to serve them. We build journeys, and this is, like I said earlier, not merely digitizing apps, but it is an entire integrated ecosystem platform play to ensure that we deliver a very good experience to these segments. And finally, I think the digital bank has a little bit of advantage compared to the traditional banks in the sense that we have no legacy system. And therefore, we can move very quickly. In some ways, you can call it leapfrogging. And these technology platforms can be very, very agile, right? We can very quickly introduce new products. And if the products don't work, we can very quickly take it out of the system and put something new in there. And that's something that the traditional bank may have some difficulty because of their legacy systems. If we can move on to the next slide. So the way we would approach it is that we are merging technology with value-driven offerings to enable a community-first approach in championing the underserved. And this we do by financial inclusion, which is to serve the target segment to facilitate trustworthy relationship and financial literacy. Through digital transformation, which is basically to transition from high-touch, low-tech to high-tech, low-touch services, and using Islamic Bank, which is to focus on the livelihood of elevating the livelihoods of the consumer segments by impacting, by aligning with the Sharia principle, and at the same time impacting the economy, the society, and the environment. I think my time is up. I can actually end there. Right. Thank you very much.
Thank you, Mr. Koo, for sharing this responsible disruption, focusing on customer experience, and that focus on that underserved market, and then finally in the form of the digital Islamic Bank. All right, we actually are raising with time. So that is also the nature of life, the nature of the business as well, especially the nature of digital banking and fintech, the game changer. I'd like to bring a scenario, and I would like to invite all the panelists to be able to comment with perhaps up to 2 minutes per person on this particular scenario. And by the way, I understand that it is true. Everyone knows Alibaba and Ant Financial Group. Several years ago, Jack Ma led the management team to a retreat. And the theme or the title of the retreat was the postmortem of why Alibaba Group failed. And in that, referring to the book of Thinking Fast, Thinking Slow, that is to actually counter the over-optimism. You see, all the factors were working in favor of the the services that Alibaba Group and financial groups are doing. That includes large customer base, consumers, merchants, licenses, all these were there. Funding, management team, technology, they have all those factors. What could possibly go wrong? It is the, that's why the framework of that, to avoid the over optimism and also to check on the irrational kind of behavior, irrational thinking. So that was the theme of the particular workshop. And coming back to our digital banking and fintech, the game changer, what could work? What could possibly go wrong? And I would like to invite to start with Mr. Goh to share your views and experience.
Well, just now I mentioned about the 6 parameters where you start with evolution, of course, subjecting to invisible hand, therefore economy, and demand side, supply side, and so on. Now, and obviously technology. Now, that is one factor that can affect survival. Now, number 2 is the trust factor. Now, trust factor can affect survival too. And of course, in this particular case, is extremely important, especially in banking. Now, the third one is the rules and regulation, which is what hit and financial. I was looking at their listing, and I was very worried about the rules and regulation problem. In fact, I told my board, I was just completely not comfortable to invest, and the board thought that I was just trying to be naughty. Now, the next one, of course, is purposeful. Now, it has to be purposeful. It cannot be just behavioral. Now, behavioral is a very important thing today. Whether it's Google, whether it's Facebook, it's all behavioral. Behavioral is always driven by convenience. Now, so convenience can easily be delivered by technology. But the problem with convenience is everyone can come in and compete. And that is called comparative advantage. So that can kill. That can kill if you think that you have a great idea. You better look around. Most likely there are about 1,000 people having the same great ideas. And that from comparative advantage point of view, it is not a factor for survival. And last part is the shared value. Now, shared value, it is extremely important when you cross the countries. When you go to Thailand, it's a different world. You go to Latvia, it's a different world. You go to Kenya, it's a different world. You go to Bratislava or Slovakia, it's definitely a different world. Indonesia is a different world. Now, just look at it as though technology can cover all the different cultures. China, example, is extremely different. Now, and that explains why people couldn't understand what is going on in China. Now, so all this, of course, can meet and break. And these are the factors. Thank you very much.
Thank you, Mr. Goh. All right. Yeah. So lots of insights and gems there. Can I invite Matthew also to share your comment?
Yeah, I mean, you brought up this scenario, which obviously is very, very sensitive, right? It's also politically sensitive, but without talking politics here, I think, given where Jack Ma currently is, his current status, probably he didn't do such a good job to account for, all kinds of risks, right? In his postmodern, given where he is now. So I think, joke aside, because banking is a very heavily regulated industry, right? So when you do any sort of disruption or digital transformation, you always need to take that regulations, authorities, central bank, government into consideration, right? I mean, this is actually a good example. I think someone actually brought up the topic about, cryptocurrency, right? So see the blockchain technology in its own right, it's a beautiful technology. It's the future of technology in terms of infra, right? So it do away with the issue of trust, right? But depends on which scenario you're going to apply to. If you apply to a legal tender, a nation currency, then you're directly challenging the sovereignty nation of a country, right? Any ruling country. That's why Facebook had the same issue with their digital currency. So coming back to Jack Ma and Alibaba, I think if you're talking about post-mortem, probably he underestimate the importance of working with regulators, government, and so on and so forth in such a heavily regulated industry, i.e. banking, right? So that's my 2 cents worth, Dr. Wei.
Wow, thank you, Matthew. I just received a note from the organizer that Tok Pa, who is going to give our keynote address at 12:30, is very much on time, and he's actually on the way to come online. So I would need to request the rest of the speakers to use 1 minute each to address this. May I have George, please?
Sure. Thanks, Dato. I think just to your point around what could go wrong, particularly around the digital banking and fintech space in Malaysia, I think I will highlight 2 areas. One is around the potential deterioration of credit quality. You've got new business models like buy now, pay later. If you look at it, there is a potential for adverse selection, and that could create a lot of adverse conditions for credit portfolio in Malaysia. The other point I would raise about potential adverse or downsides actually relates to investor or VC and investment banker type of attitudes towards startups, fintechs, digital banks. They are pursuing an agenda around valuation. And if you drive a bank towards achieving valuation targets instead of sustainable financing, instead of prudent financing, then there's going to be problems for the entire ecosystem. And I'll pause there. Thanks.
Thank you, George. That was very succinct. And then Elaine.
Thank you, Dato. Okay, I'd like to echo Mr. Goh and Matthew, and I totally agree with them. I think, and especially also in my experience with my regulator, the Securities Commission, especially in the highly regulated environment and industry, so the engagement with the regulator is so important. That's number one. And number two, I think it would tremendously help also if you have a very progressive and facilitative regulator that embraces change, technology, but at the same time, as the operators of the platform, right, or whatever product and service platform that you want to offer, you have to, I think, make it clear to the regulator how you're solving the problem, how you're addressing compliance issues, the risks, and so on and so forth. And I think if you have all that covered, you're all set to go. So that's for me. Thank you.
Wow. Okay. All set to go. That's short and sweet. Thank you, Elaine. And may I invite Dato' Henry?
Yeah, I think everyone's talking about regulatory and regulations, and I think that's true. And I think that's really the biggest hurdle because a lot of technology companies out there, they've been offering technological services to the market. They have always been an environment where the regulations are not so tough. They do not have such tough regulators like central banks, for example. So they have been always an environment where they're pushing the boundary of what technology can do. And I think bringing that kind of mindset to banking and to digital banking environment per se is good in the sense of you can introduce new products and solutions. But I also think is that would be a biggest loophole, I would say, in the sense that can regulators actually catch up to it? And by the time if regulators catch up to that, the biggest victim could be the end consumers themselves rather than the banks themselves. So I think we need to create a correct balance between regulations and technology, and to make sure that it's not overly used in a form that consumers might end up be the losing end of the gun. Yeah. That's what I should say. Yeah.
Thank you, Dr. Henry. And Mr. Khoo, could you please use 1 minute, please, so that we can wrap up?
Of course.
Thank you.
I think all what has been said by the distinguished panel are all true, so I will not add to that. But to my mind, what is very important is digital bank or banks must remember why are they there, and they are there to serve the customer, and the customer is the key of everything, right? Let me relate to you. I was a small boy that was born in Muar. I used to go to the OCBC bank, the old OCBC bank. And I will always see this scene of the old man in a very tattered pagoda t-shirt with a shorts that's equally tattered with a raffia string around his waist, with Fong Kiong flip-flops. The moment he walks in, the branch manager runs out, greets him by name, take him to the teller. This is the sort of relationship that we had in those days with, you know, the banks that are no longer with us, right? The relationship, the intimate knowledge and relationship. And that, to me, is the key. We are hoping that with the digital bank, with the use of technology and all the other factors that we can bring to bear, we can resuscitate that relationship, not in the same way as that I experienced as a small boy, but that is possible. And so to me, putting the customer at the center is the key. And of course, all the other factors are just as relevant. Thank you.
Yes. Thank you, Mr. Koo. All right. I think we have achieved the whole intended purpose of this thought leadership session, essentially about our digital banking, fintech, and the game changer. And in fact, it has pointed to the keyword weaving of technology, the purpose, the insights, and everything else, regulation into the model. And as such, whether bank, digital bank, traditional bank, or otherwise are actually similar. And what is necessary is actually the market, the underserved market, and so forth, and have a chance to personalize them. So I think we're going to compile and take all this thing in, and wherever possible, we'd like to give this as a feedback to our regulators as well for the kind of further planning and decision. And with that, I'd like to thank all the panelists for your insights. Thank you very much, and I wish everyone a very productive day and happy Mooncake Festival.